Catch up on all the live shows right here on africatechradio.com.
Just before 2020, that's COVID year, for those who had not been following the tech ecosystem in Africa generally, the ecosystem got much more coverage, much more popular from 2019, the year before the COVID. And from then, it was all highs. And then 2023, where we're at now, and it seems like money has started drying up, or funding / investment has started drying up. And it didn't just start drying up in 2023. 2021, I'm guessing, it was like the peak year, and then started experiencing some downturn. I didn't really call it a downturn in 2022 because I was like, it's just maybe small, challenge. We're going to get over it. But it seems like it's biting hard. And here in this episode, we're going to be looking at the trends that shaped funding and investment in Africa in 2023. And I have here with me Sylvester Kay-Adade. He's a business and investment professional, and he's the market research lead at Ingressive Capital. Ingressive Capital is a 10 million Fund 1 and 50 million Fund 2 Pan-African venture capital firm. And he follows investment trends and patterns across the key geographies of the company and, all of Africa actually. Before Ingressive Capital, Sylvester led market research and small business advisory at Kedari Capital and worked as part of the team that managed 2 major transactions totaling over $1 billion within and outside Nigeria. And he's also an alumnus of McMaster University and Mohawk College. Hi, Sylvester. Hi. What's up? How are you doing today?
Hi, Anthony. I'm very well, thank you. Thanks for having me. Glad to be here.
Good. First off, tell us what it means to be a market research lead at a firm like Ingressive Capital.
Interesting question. So what I do basically is look at our focus geography. So Ingressive Capital is Pan-African, but based on our investment thesis, we focus on 5 major geographies which have high mobile penetration, which have youthful population, seem to have a relatively high innovation drive. So based on that, we have 5 countries that we focus on, which are Egypt, Ghana, Kenya, Morocco, and Nigeria. So what I do is make sure that those 5 geographies still have the promise that they had when we first started investing. So by that, I mean, has anything changed that would make those geographies not good investments moving forward? Is there anything that we need to take note of that could negatively impact our podcasts in those regions? Is there anything that we need to know? Is there any sectors coming up that we need to take advantage of? I also look at the rest of Africa. So what's happening in North Africa? What's happening in the West, in the East, and South Africa? Is there anything happening in those regions? Is something coming up in those regions that we need to ride the first wave, on? Is there anything promising coming out of those regions so that we can quickly, take advantage of those opportunities? Yeah, that's pretty much what I do. So in case of Ingressive, we typically don't invest in South Africa, but then we invested in a company called Carry First. And that's Carry First is like a pioneer in the gaming industry in Africa. I'm sure you already know about Carry First. Mm-hmm. So because of the promise and because of the innovation of the founders, we actually invested in Carry First. Though South Africa is outside our focus. So it's not that we just focus on 5, but if there's promise in any other African country, we'll definitely get into it.
Okay. And it isn't like there's a reason you don't invest in South Africa. It's just that you haven't ventured into it yet, right?
Well, I would say it's not a primary focus, and that's because South Africa, for the most part, is a highly advanced of all the economies in Africa as one of the technologically advanced, and what Ingressive focuses on is tech. So if it's not going to be something novel, if it's not something that's going to be GDP transforming, then we technically don't focus on those areas. We like to focus on areas where the technology is going to make a huge impact. And for South Africa, they're pretty much way ahead of the rest of the continent, relatively way ahead of the rest of the continent. So we don't particularly focus on South Africa.
Okay, that's interesting to know. I know better now. When we got to the first half of 2023, the end of the first half of 2023, the startups in Africa surpassed the $20 billion mark in terms of capital infusion, in terms of, funding. And this is over a period of 15 years. It was a great milestone. But at the same time, there was a decline in the amount of funding in, say, looking at 2022 and 2021. It was just about $1 billion. Can we actually say, that we are still in that downturn or still in that decline mode in terms of funding for startups on the continent? Looking at the fact that we are just a few weeks to the end of 2023, and it doesn't look like we would be hitting the mark we hit in 2022 or 2021.
Okay, well, I'm glad you asked that, and it's definitely something that a lot of investment professionals have noticed or have commented on. But I wouldn't say it's on a decline. I would like to mention that it's something that is happening the world over, and that's primarily because of the SVB crisis that happened earlier in the year. There was also, most countries also experienced a lot of countries.
So, sorry, for context, SVB is, for those who are new to the conversation, Silicon Valley Bank.
Silicon Valley Bank, yeah.
Okay.
So Silicon Valley Bank had a huge crisis earlier in the year, and that kind of shocked the entire ecosystem because most Silicon Valley startups, even some startups in Africa, actually bank with Silicon Valley Bank, and then they had a liquidity crisis at the start of the year, and that made a lot of tech investors very shaky. Put a lot of tech startups in jeopardy because a lot of them had most of their money invested or stored in that bank. So that was one major problem. Another problem was the inflation. So inflation hits. It wasn't just an Africa problem. It was a European problem. It was a North African problem. It was a global issue. Different countries battling inflation to varying degrees. So most investors were just looking for safe havens for their money. So most investors, primarily US investors, started pulling their money out of Africa, out of Asia, out of Europe, and putting it back in their own country, which was giving them better interest rates. Everybody just puts their money wherever they can get the best returns. But I'll say on average for Africa, I don't think we had too much of an issue. Earlier in the year, we brought in a lot of money. I'll mention like three scenarios. So for example, in January, Jetstream raised about 13 million for their Series A. Carry First, like I mentioned earlier, raised 27 million. Most notably was the 400 million raised by MNT Halan in Egypt. That was in February. There are a couple of major investments that came into Africa. So I would say the decline, if we were to look at it as a decline, started happening probably around the halfway mark this year. And what can we attribute to that? I wouldn't say there's a specific issue. I would just say most investors are becoming more skeptical. So there's a lot of time being spent on due diligence now, as opposed to, just hopping on, everything looks good. So now more investors are looking more critically before they invest, right? So something that would have taken a month now will take, 2 months, 3 months. And I would know this because we just concluded our fundraise, and most of our major investors or most of the LPs that joined us, it took quite a lot of time to get through their due diligence before investing. So I think their investors are still interested. It's just now they're more skeptical, and they also read the news, so they hear about some startups that fail, and I mean all those are expected in venture capital. You always know that if you make maybe 10 investments, maybe just 3 or 4 of them are going to do very well. The rest might be write-offs, or the rest might not do as well. But the 3 or 4 that do very well make up for, the 7 or 6 other failures. So it's expected, but everybody looks at Africa as the promised land. This is where to make the money. So anytime anything fails, people start getting paranoid about the future of that geography. But I think for the most part, Africa is still doing very well, especially when you look at Africa brings in barely 1% of the global VC funding. Like if though I don't remember exactly, but I mean I did the calculation a little while ago, and it's just a little over 1% of global VC funding actually comes into Africa. But for the most part, Africa is still somewhere that is promising, especially when you look at if you invest in the right companies that have a good strategy, they have a clear path to profitability, the founders are experienced, and when second-time founders come back into the ecosystem, is always exciting. So I think for the most part, if you're really in tune with what's going on, nothing's really changed. It's just investors are more skeptical. So it's taking on a lot more time for them to deploy capital.
Okay, interesting. Now, back to the work that you do, what do you look out for when you do the research that you do in geographies, like in different locations and what are the key things you're looking out for? And I want you to be a little bit more specific, and maybe if you want to maybe like share with examples of what maybe you've looked out for in the past and say, oh, this it's something that we should watch.
Okay, well, I do it month on month, and then I do an analysis for the quarter. So on a monthly basis, for example, I look at basically how much came into the ecosystem across Africa, how much came into the ecosystem for our geographies. I look at what were the tech sectors that brought in the most income and why. For example, okay, I'll be more specific. So what I've noticed over time, or what we've noticed over time, is fintech still keeps bringing in most of the investment across Africa, and this is not because of Paystack or not because of MNT Halan. It's just something that we see keep coming up every now and then. And what we've noticed is that fintech is coming up because more and more mobile penetration is increasing across our geographies, even just across Africa. I mean, right now there are more mobile users in Africa than North America and Europe combined. And that's not just because we have a large youthful population. I mean, we have a very large youthful population, but at the same time, that youthful population is getting more interested in tech, right? So regardless of if the youthful population is in urban areas or they're in rural areas, most of them have access to a mobile phone. I mean, once you have access to a mobile phone, then you have access to data, you have access to the internet, you have a way to learn, you have a way to do transactions. Now, transactions is a part of life. You have to transact to get food, you have to transact to get clothing, you need to do some form of transaction, you have to exchange money in order to get things done. So whether you're in an urban area or your rural area, that's something that's generally that everybody can relate with. So fintech is growing astronomically because more and more people, there's more and more financial inclusion. So the more a startup or the more fintech startups that focus on financial inclusion or making banking or making transactions easier for people in remote areas or in rural areas do financial transactions, the more promising it's going to be. So more and more fintechs are looking at that aspect and going into that sector specifically. So fintech, for the most part, brings in a lot of money, whether it is banking, whether it is cross-border transactions, whether it is crypto, whatever it may be. It's
Lending.
making yes, lending for SMEs, lending for private use, whatever sector it is. Fintech does very well in Africa. But then there's also agri-tech, and the agri-tech is also kind of fintech related, because the agri-tech that does very well is agri-tech that makes farming not only easier for farmers, but also makes it easier for farmers to get finances to buy their seeds, to buy fertilizers, and to also help them get off takers even before they start planting or ahead of the harvest season. So agri-tech does very well, and that's also tied to our population. The more people, the more food that's required for those people, right? And then the third thing is health tech as well. So health tech is also something that we see is picking up, and that's picking up primarily because health is wealth, right? I mean, that's a cliche, but everybody knows health is wealth. So any way to keep that youthful population healthy, anything that disrupts the way of doing things. I mean, the issues we have in Nigeria surprisingly are not just an African problem or just a Nigerian problem. So things like delay in getting access to medicine, or delay in getting access to a doctor, or delay in getting access to a medical professional. It's not just a Nigeria problem. It's not just an African problem. It's also something that people who live in North America experience. So any company that comes up with something that's disruptive, like getting your medicines ordered online, or telemedicine that has broken barriers, or anything really that kind of disrupts the problem in that sector and makes it something that could be applicable not just regionally or not just continentally, but globally, does have a lot of promise. So most of those three sectors, the companies in those sectors haven't built solutions that are good just for their countries or just for Africa, but they have solutions that are good for global application. So what I do is I look at what got the most money and why. Is this something that we see is going to be GDP transforming, which is something we focus on, right? We want to invest in companies that, when you look at the trajectory, this is something that goes beyond their country, goes beyond Africa, is something that has a global application. That is something that we definitely want to get into. If there's an issue, for example, unfortunately, Ghana has been having a lot of trouble this year. And that's because, I mean, it's the same issues everywhere, but it seems to be it's hit Ghana for the most part of the year a lot more than anywhere else. So we had to halt investments in Ghana for the most part of this year, because even though there were some interesting things coming out, we don't see the potential of those things growing or expanding quickly just because of the environment that they're in. So even though Ghana is still has the fundamentals we look at, their macroeconomics aren't looking very good, or for the most part of this year weren't looking very good. I mean, the city was hit pretty hard. Inflation was over the roof. Their currency, I mean, it was a hot mess for the most part of this year. So we just stayed clear of Ghana for this year, just as an example. I hope I was specific enough. I don't know if I can go any more details.
So there's something you mentioned, and I think I would ask that. What sectors did it, for funding and investment in Africa, and why? Of course, fintech, again, for the longest of time, continues to lead the pack. But what other sectors did it, and why? And the second thing I want to ask is, if we eventually, settle the cross-border payment system issues we have on the continent, do you think that fintech will still be the go-to sector for investment?
Okay, all right. To answer your first question, I think I mentioned that. So agri-tech and health tech were very close seconds to fintech, and that's primarily because of the youthful population. And if you ever do your investigation, you'll find out that agriculture and services are two of the top contributors to the GDP of most African nations. So when you see agriculture as a big contributor to GDP, and you have a fintech or a company that's focused on improving or disrupting something in that sector, you definitely want to get a piece of that. Health tech, I already explained health tech, anything that can improve health tech, not just in Africa, but globally, that's something that's interesting. But then, just to give you more insights, there were 3 more sectors that we've taken note of that have piqued a lot of interest, and that's clean tech, ed tech, and insure tech. Right. So in terms of clean tech, there's this drive for clean energy. And,
I was going to mention that
countries going, countries going green, and everybody's looking at Africa. Africa is this continent that has all this sun. Why don't they focus on sunlight? So many companies are running. I mean, I won't say running, but people are founders are focusing on, okay, how can they make the most of this drive towards clean energy, right? So there's a lot of interest in clean tech, and not just because there's just random interest, but for notable reasons, right? If we can take advantage of something that we have an abundance of, why not, right? So there's sunlight, there's wind, there's water. So how can we take advantage of those? How can we take advantage of those
natural resources?
Yes, those resources, that's the word, those resources that we have in abundance. So that's something that a lot of investors are backing. EdTech as well, where you look at, again, everything is really centered around the fact that we have a young population. So, getting people, that young population educated so that they can build Africa's, workforce and our human capital, so that they are more educated, so we have more founders, so we have more innovators. If they're not educated, then they can become those innovators, they can become those founders. So anything that is making edtech more accessible, that's making edtech more accessible, really, is something that is highly focused on. I mean, for example, in Nigeria, the MasterCard Foundation did a partnership with CC Hub, where they invested $10,000. Was it either $10,000 or $100,000? I don't remember exactly. In 10 edtech companies that CC Hub identified, and those as companies that are making a huge difference in Nigeria, basically. And finally, InsurTech, which is surprising because most of Africa, we all have this, God forbid, health policy. God forbid health policy. It can't happen to me. It's not my portion, so people don't usually.
Insurance isn't a big thing for us.
It's
God is our insurance.
It's not necessary. Why do I have to spend this money and never have to use it, and I can't get the money back? It doesn't make any sense. So, but then most countries are making auto insurance necessary. So now people, if you want to have a car, you have to have auto insurance, right? So how can auto insurance be more accessible to people? But then after getting them their cars insured, how can you get them to also buy into health insurance and get them to buy into home insurance and all of that? So companies that are focusing on not just making the insurance policy available but easily accessible, making it easy to understand, making the policies easy to understand, making the premiums affordable, and also able to upsell the people that do get the car insurance or make it more attractive, are getting a lot of love from investors now. So I would say the 6 that did very well this year or are doing very well this year so far are fintech, agri-tech, health tech, clean tech, ed tech, and insurtech.
Now to the other question. If we fix the trans-border payment system issue we have in Africa, will we stop seeing the flow of investment into fintech?
I don't think so.
Why?
I say this because for the most part, this is something a lot of companies who are well funded are focusing on. You have Flutterwave, you have more recently Payday, you have a couple of them that come to mind. I don't want to publicize any for any random reason, but for the most part, that is something a lot of them are focusing on now. I don't see that as a deterrent to investments in fintech because different countries are different paces in their adoption of technology, right? So Nigeria is at the forefront. You have Kenya, you have Egypt, you have South Africa, but you also have up and comers like Rwanda, like Senegal. And I say this because I was having a discussion with a colleague that is based in Senegal, and he was telling me how he's looking to set up something in a particular sector that is not novel. In fact, in Nigeria, it's something that we've gone past. Nobody's even looking at that aspect anymore. Or it's something that hasn't been innovated in Senegal. So he's trying to take advantage of that sector. And he explained all the reasons why it makes sense. And I was just surprised that, are you serious? They're so behind in in something that Nigeria's left, eons ago.
Wow.
And a very good example is the DRC, right? Democratic Republic of Congo. So there's a company based there that has its founders. They worked with the likes of Airbnb, Meta, all those big companies in the US, and now they've moved back home to the DRC. And while having a conversation with them, they were telling me how they're going to make so much money and blah 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 blah. And I was, okay, why? Why do you think you're going to make so much money? And the tech infrastructure in the DRC is way behind. I'll give you a clear example. So he explained that two banks, for example, let's say Access Bank and GTB, to make it relatable for Nigerians. Let's say I wanted to transfer money from Access Bank to GT Bank. I would have to wait a week.
Wow.
Or 3 days for the transfer to be processed and completed, and that's because they don't have that interbank switch. They don't have that infrastructure in place. And so with their experience, in the US, they are building that infrastructure. So basically, they are building the interswitch of the DRC. And after building the interswitch for the DRC, then they're going to have to build the infrastructure to make it faster. So first, they will start with, okay, maybe we can make it 1 day instead of it taking 3 days. Then they'll take it to 1 hour before they can get to the point where it's 5 minutes or even seconds, like it happens in Nigeria. So what they said is the same thing for their neighboring countries like Senegal and Central African Republic. All of those countries in that region have the similar banking issues where they don't have the infrastructure for lightning fast payments. And it's the same thing if that happens within the country, imagine transferring money from the DRC to Nigeria or the DRC to Togo. That would take the same amount of time, weeks, if not months, right? So I say that because even if we break the barrier of cross-border transactions, there will always be the countries that are way behind, and there will always be startups that come to solve the problems in those countries. So as someone comes up to solve that problem, that's an easy. They have the expertise, they have the technology, they have a clear path to profitability. Definitely, people would invest. And two countries that are taking a lot of notice now are actually Senegal and Ivory Coast. So investors are looking at those two countries now as up and comers. On the African continent. So I think, regardless, fintech would always be something that is big in Africa, just because different countries are at different levels of their, technology, their embrace of technology, or their advancement in technology.
Now that we're talking regions, what regions received the most funding in 2023? Do we still have the 5 major corporates, or do we have entrance of new blood?
No, it's still the usual guys. So Nigeria, remains number 1, closely followed by South Africa and Kenya, kind of neck and neck, and then we have Egypt. I'm missing. There's another, but I think for the most part it's those 4 actually, not 5. Those 4. So Kenya, Nigeria, South Africa, Egypt. They have brought in the most funding this year. But we have up and comers, like I said, like Ivory Coast, Senegal, Rwanda, that are getting a lot of interest as they step up their game in tech.
What's driving?
What's driving?
Okay.
Sorry, I just wanted to answer your question. So if we're talking regions, the West African region definitely brought in the most funding, and that's because of Nigeria.
What's driving the up and coming? What's pushing them those countries. You just mentioned those returning from the US and from companies that are international companies back home. Aside those returning, the returnees, what else seems to be driving the growth of investment or funding in the countries that we're seeing much more inflow into?
Okay, I would single out DRC, Rwanda, and Senegal. And what's bringing the attention is what the fintechs, or sorry, what the tech companies are focused on. So, for example, in the DRC, anything that's focused on agriculture and infrastructure is a huge hit, because anything that can fix their tech infrastructure is very well welcome. Like what I mentioned earlier, the guys building the InterSwitch of the DRC, and then agriculture is a big contributor to their GDP. So anything that makes things easier or can improve their outputs agriculturally is very welcome. So that is why a lot of funding is going there. Also in the DRC, there's a company called Nuru, and Nuru brought in, if I'm not mistaken, 90 million in funding, and they did that because what they're working on is a clean tech company, and what they're working on is trying to build infrastructure for a solar mini grid in the DRC. So, I mean, 90 million in funding is huge for a country like the DRC, and that is also an infrastructure issue. So, it's a company coming in to fix infrastructure in terms of electrification, right? So, that is also something. So, infrastructure and agriculture, any tech that goes into the DRC focusing on agriculture and infrastructure would do very well. In Rwanda, they're more focused on, I would say, technological advancements and agro-processing. So anything that is making the value chain expand their value chain. So not just in terms of improving their agricultural outputs, but also improving so for example, if they have cocoa, if you can help them transform cocoa into chocolate, or if you can help them transform cassava into something that can be used by breweries, for example, that is something that they're closely looking into. And anything really that can mechanize, that can automate a lot of things that the rest of the world has automated, or things that aren't being manually done by most of the rest of the world, that's something that will do very well in Rwanda. And then in Senegal is primarily focused on agriculture. So they have a lot of grants, they have a lot of tax write-offs. They have so many brilliant incentives for anything agriculturally based, right? And this year we've spoken to like 3 companies who are focused on improving the output of. One is focused on improving the output of farmers. One is focused on providing credit to farmers. The third one is focused on providing off-takers for farmers. I mean, it's all about Senegal. And I know that the UBA in Senegal provided the largest credit facility they've done ever to a company that was focused on improving access to credit for farmers in Senegal. So that just shows the amount of promise that their agricultural sector has. So pretty much any tech in Senegal, agriculture, Rwanda, agro-processing technology, DRC, infrastructure in general, as well as agriculture. That's why those 3 countries are hitting the map.
Now, let's talk about regulation, government, and regulatory activities and how it has impacted the space in 2023. I want to paint a few pictures. First, I know that clean tech or climate tech, it's been building up across the world. The conversation around it has been building up across the world for a while. But I know that in 2022, right? Yeah. The Nigerian government, launched a particular initiative, that, promised a lot of money in the fight against climate change. And I know that in 2023 the African continent, especially the leaders, came together and they had like the Africa Climate Week or summit, the first time ever, and had these are the things where we want to do, the ambitious goals, and this was before or headed to COP28. As we speak, COP28 is happening, and we're expecting what news will come out of COP28. But the amount of announcements and pledges that especially those leading different ministries or government agencies have put forward, I think that somehow impacted this space, especially in terms of the trust that went into clean tech or climate tech and the startups in that space. Now, I want you to think about the kind of regulations or regulatory announcements and the amount of effort that the governments in different regions and countries have put forward that has impacted positively or negatively this space, from Rwanda to Nigeria. I know Nigeria signed the Startup Act. Rwanda, and the announcements are being made, visit Rwanda and, come invest in Rwanda, to North Africa and what's happening there too.
Okay, thanks for that. So I would say for the most part, Kenya, Uganda, either Uganda or Rwanda, Kenya, South Africa, and Rwanda or Uganda, I don't remember exactly, are really leading the pack in terms of adoption of clean energy, or actually moved beyond just writing policies or regulations. They're actually doing the work, right? So for example, in Kenya, they've signed like 3 grants, or they received like 3 grants, one from the US, I think both from the US actually, one from the US, one from an international body, for I think there are 4, Kenya has like 4 initiatives that they want to bring in, mostly targeted at transportation, so infusing clean energy in the transportation sector, right? So Kenya is big on that. They also have a grant for companies who are focused on electric vehicles. In South Africa, the same thing. I think South Africa is even looking more into that now because of all the
electricity cuts and
this year. So they are even looking more into that. They recently received funding from either the IMF or the World Bank, either last month or I think last month they received funding from the IMF, specifically looking at how they can bring in clean tech into the region besides what they're already doing. And I think in either Rwanda or Uganda, I forget exactly, or even both, are looking into, companies are looking into providing grants for innovators or founders who even have an idea of, so just an idea will be fine, and they can fund how that can be adopted in the country. It's probably most likely going to be Rwanda, because Rwanda is really tech focused. For Nigeria, I really don't know what to say about Nigeria, because we're very good at providing policies or writing policies and saying all the right things and doing all the right publicity, but then when it comes to enforcing or putting it into work, it becomes a whole nother story. But I do take note of what the new Minister of Innovation and Digital Economy is doing. That's
Bosun Tijani.
Bosun Tijani. I mean, he's one of his focal points was trying to get more youth into tech, and I mean they really recently launched something. Even Ingressive was even part of the conversation on how they can get more young people into tech, whether it's in coding, in writing code, in whatever they can do that's tech related, so that we can improve the tech sector. And I guess that ties in with the Startup Act. And there was also something that they launched along with the Nigerian Stock Exchange, where they want more startups to look at IPOs as an exit beyond acquisitions. Mostly it's been acquisitions that have fueled exit for most founders in Nigeria. Some bigger companies acquiring the company, and then that's it, right? So they want more tech companies to look at IPOs as a valid strategy to get money. And they're trying to bring all sorts of initiatives, because I mean, everybody likes dollar more than naira. So it's very hard to convince people when they can get dollars, huge millions of dollars, to get them to settle for millions of naira. So there's an ongoing conversation there where they opened a portal recently. That's the NGX, Nigerian Exchange Group, opened a portal recently specifically for startups and trying to help them to get the documentation they need and all the information they need to exit through an IPO. I think it opened last month, and I think it's going to be more aggressively focused on going into 2024. So in terms of, even though Nigeria does write good policies and does take some time, I think the new minister is taking this more aggressively. So I commend him on that. So those two things in Nigeria, that one thing in those three countries I mentioned earlier, which is Kenya, Rwanda, and South Africa. For North Africa, I don't really look too much in what they do beyond what is going on in Egypt. And if Egypt is a good focal point for Northern Africa, there's a lot of focus on doing things within the North African space and the Middle Eastern space, right? And a lot of their investments, surprisingly, do come from within their country or from Saudi Arabia or the United Arab Emirates, right? So a lot of their policies are focused on making things easier for Middle Eastern countries, if I can say that without offending anyone. But they have a lot of good regulatory policies, but it's focused mostly on their region, right? Not really Africa as a whole. So I can't speak to their regulatory policies, but I do know that Egypt, opened something they called the Supreme Council for Investments earlier in the year, and that is, that's commendable. Kenya did something as well in the technological space. Ghana, Ghana is where Ghana is, but for the most part, their country has stabilized because of the injection they got from the IMF, the 3 billion extended credit facility. So that's mostly stabilized their currency for now. So we were hopeful for big things to come out of Ghana from next year, or even from this year. From this year, actually, this company, Complete Pharma, which is one of our podcasts, raised about over $3 million just last month in their pre-series A. So that's a good thing that's happening in Ghana, and that shows a lot of trust that investors are having in Ghana now. But overall, to answer your question on the regulatory environment, I think we have the right initiatives coming up, and a lot of countries are bringing up initiatives that are very good for foreign investments, that are very good for the ecosystem in general, as well as the ecosystem within their countries. What I would be skeptical about is the implementation of those policies or the enforcement on those policies and making things easier for startups going forward. I know the CBN was very harsh fintechs during the past CBN governor's tenure, but I think things have begun to turn around.
Okay, and CBN, for those listening, is Central Bank of Nigeria, so this is more focused on
Nigeria. The Central, the Central Bank of Nigeria. So
let's look at shutdowns in 2023. Did you expect the number of shutdowns and how big, of a news splash they made when we started out in 2023? And do we have more shutdowns, or do we just have more reporting of shutdowns? And what's your take generally on the amount of shutdowns we've had this year and what that says about the ecosystem?
I'll say for the most part, most of the shutdowns, if I'm not wrong, were fintech related. At least a big portion of them were fintech related. And I think what happened is not necessarily a lack of funding. I would think it was not having the right structures or the appropriate structures in place. So, for example, and it's always related to financial management, right? For example, we have 54Gene in September. 54Gene they've been trying to get back on their feet ever since they reported their issue last year. And, they tried to raise some money. It didn't work out. They tried to change the way they do business. It didn't work out, and I think eventually they had to wind down. So that was a management related issue is what led to the demise of 54 Gene. When you look at Payday, for example, it was just recently announced that Payday has been acquired, even though they raised 3 million earlier this year. It also begs to say, okay, what kind of financial decisions were made in the management of the funds that were released, right? So for the most part, I think, and there was also Pivo that raised 2 million about the time last year, actually November last year. They raised 2 million in funding primarily from Y Combinator, and then they just shut down. They announced that they'll be shutting down last month, right? So just a year after raising 2 million, it's like, oh, what happened, right?
Just like that.
Yeah, just like that. So I think for the most part, it's young founders getting access to huge amounts of money and not having the necessary financial structures in place on how to manage their finances. And that is something that we caught a hold of quickly, because we had about 2 portfolios that were affected by again, the SVB crisis, the Silicon Valley Bank crisis that happened. We had 2 portfolios who had some of their money in there. So we had to raise credit facilities for them, bridge facilities for them in order to continue going. And then we organized a financial manager. We got a financial management professional who's a general in financial management. So we reached out to him and had him do a presentation or have a talk with all our portfolio companies on the structures to put in place to make sure that they can manage their finances very well, how to stretch every dollar, how to reduce burn rate and all of that. But I think it's something we expected, not to the degree that we saw, but it's something that's expected. Not every startup will do well. Not every company that you invest in is going to go on to, profitability. But you don't expect it to be an issue of mismanaged funds when it does happen. It's usually tied to, okay, there was some regulation that abruptly came in and destabilized them, or, there was another guy got into the scene and crushed them with, some new advanced feature that they didn't see was something that was going to be, big. It's usually something around innovation or lack of innovation. But when it's financial mismanagement, it's not really a good sign, right? It starts making it look like these guys are too young to manage their the amount of money that they're handling. So I think going forward, for example, what we've decided to do is every company has to go through financial management course, or some kind of analysis of your structure, and then definitely we have to be on the board just to keep abreast on what is going on, because sometimes they do release, even though most companies require that these companies release, monthly updates or quarterly updates, sometimes you don't look too closely at the updates or see how realistic those updates are. You're just happy to see, oh, okay, good. Number of users is going up, excellent. Revenue is up, profit is up. You don't really look at really how did you guys arrive at these numbers, right? So for the most part, I think we can chalk it up to financial irresponsibility for the startups that did close down. And the best way to handle that is make sure that each investment, there's a structure in place on how to manage the finances. The burn rate is low. Take a closer look at how much they're paying each other, because some of them pay themselves outrageous salaries. Just overall, and make sure, somebody, if you do a large investment, make sure that you have a board seat just to have an oversight of what is being done in the company.
And looking back at what you said when we started the call, the changing funding environment that we have on the continent now. A few years back, we just had like a ton load of money just coming in. It's like, well, if you have an idea, just someone to fund it. And now, because of the economic environment globally, everyone is, shining the eye more, like, oh, let's actually look at this thing and see, let's be sure this is what we want to do. Let's scrutinize this a little bit more. And it seems like this is the year we're seeing that what is coming to light in terms of, financial mismanagement and whatnot. how much of a change is happening in the funding, and investment environment on the continent?
I wouldn't say a lot is changing, and I wouldn't chalk it up to an Africa specific issue. Just like you said, everybody's shining their eye more. They're becoming more skeptical. Their due diligence is taking a lot longer just because they want to see the nitty gritty of every single thing. So I think Africa is still, hate it or love it, Africa is still the golden child in terms of
Yeah.
it's still the golden child, in terms of funding worldwide.
Yeah.
I mean, everybody is looking more and more into Africa. For a lot of our LPs, for example, Ingressive is their first Africa anything. Like, they didn't know anything about Africa. They didn't care anything about Africa until we enlightened them and show them our investment thesis and our track record. And it's like, okay, let's get a piece of this action.
And the returns have been coming too.
Yes, and of course, the returns have been coming. So those kind of numbers piques the interest of investors when they see that. And when you see that you're investing in a continent where all these fundamentals make sense, when you look at mobile penetration is going up, the population is going up. Africa is going to have the largest population in the next 5 to 10 years. You look at, so anything really. And that's why Nigeria is still a darling, because we have the largest economy, the largest population in Africa. So anywhere where there's a lot of people, there's a lot of potential. So I don't think funding is going to reduce drastically. I think there was a slowdown, and that's understandable because people don't like losing money. Nobody likes losing money, so people are being more skeptical. But I think for the most part, Africa is still the sweetheart. I mean, when you compare it to Latin America or LATAM, as some people call it, had the same trajectory as Africa, where there was this sudden boom, and then there was so much money coming in. All of a sudden, last year, it's like, what's going on? People are taking their money out. What's going on in that area? And it doesn't seem to be coming back up. But for Africa, like you said, there was a slight dip, but not substantial enough to be like, hey, what is going on? It's clearly understandable. People are being more careful with their money. People are taking more time. So just in a nutshell, what I'm trying to say is Africa is still doing very well. It's still bringing in a lot of venture capital. We're still getting a lot of interest. There's money coming in and there's interest coming in. So the more the interest is rightly positioned at the right companies, the funding definitely will come in. The more innovation that comes in, the funding is definitely going to come in. I just think it's not going to be as easy as we had it in prior years, but I don't think anybody's going to up and leave Africa anytime soon.
Is this supposed to be like a, how they say this is a transformative step? So when people look at a journey, for example, they say, this is step 1, step 2, step 3, step 4. So if you're in step 2, they're like, oh, well, yes, it means, you've left step 1 and it means you're headed to step 3. So this period, can we describe it as a period or a step or a phase that we're experiencing? And do we clearly know that, usually, like if we look at other climbs that have gone through, this journey, this is supposed to be the next step, or this is how it's supposed to move, this is where the next step or where we're headed from here?
Well, I'll probably describe it. I mean, there isn't enough data to describe it as cyclical, but I would say it's probably a cycle, right? You have those periods where you do super well, and then you have the times where it goes down, just like the stock market, right? There are periods where there's so much money coming in and valuations are through the roof, and then there are the periods where, oh my God, what happened? Everything is going down. So I think we don't have enough data to say that, okay, this is a cycle, because for Africa, everything has just been going up and up and up and up and up, right? So I would say maybe we're in new territory, because it's been good news so far. And then it's like, oh my God, what's going on this year? But I would say, yeah, I guess you could describe it as this is the next step, in terms of we haven't reached our maturity. I don't want to say that for the most part we were spoiled in terms of everything was just looking good, getting so much money and we can do no wrong. I think we got to that point, and there was a time where there was the buy now pay later boom, then there was the instant payment boom, and then there were so many people doing the exact same things, and everybody was just throwing different VCs, throwing money at whatever, everybody trying to get a piece of everything without actually looking at the fundamentals or looking at what is so unique about company A, because B is doing the exact same thing. What is the differentiating factor, right? Everybody was just trying to get a piece of everything. Everybody was looking to fund the next pay stack, right? So I think that is what happened. And then now people are, all those companies that were trying to be the next pay stack or were not doing anything, didn't have a feature that separated them from someone who was like someone who was the leader in that segment, have now started seeing the repercussions of not having a USP. That's unique selling. Well, it's supposed to be unique selling point, but right now I'm referring to unique selling feature, right? So if you don't have a USP, something that separates you from others, eventually is going to tell, and you're not going to get a lot of traction moving forward. And I think that's what happened to the likes of Pivo, where they're providing facilities for SMEs, but there are a million other. PayPoint is doing exactly the same thing. PayPoint does something very similar. There's credit, there's rent money. There's fair money. There are so many fintechs that are doing that and have a bigger balance sheet than they do. So eventually, they're going to run out of money, run out of funds, and I think that's what happened. So I think for us, I would say we've evolved into the stage where now there's more scrutiny looking at what exactly is your business model, what exactly is separating you from A, B, C, D that already exist. What are your future plans? What is your growth trajectory? Do you plan to move into Ghana, move into Senegal, move into Uganda? What is your plan, going forward? And then, like I said, just more scrutiny really in your finances, because you always have to remember that even though it's a lot of money, it's somebody's money, right? So you have to be careful with how you're spending other people's money. And if they see that, Africa is beginning to have too many defaults in a particular sector, then more scrutiny is going to go into those investments. So I think we're at the point where people are not dashing us money, in quotes. Now they're actually investing, and when it comes to investing, there's a lot of scrutiny and due diligence that goes into making investments. So I think, yes, we're at the next stage where now we're big boys, we're not children, so we have to sit up and pull up our pants if we want money from investors going forward.
Okay, now let's look finally at the types of funding and investment that's coming to Africa. Debt financing, which ones have you noticed in 2023, and has there been any difference, from previous years?
There's a slight difference. I think for the most part, I primarily focus on equity financing, but I have noticed that debt facilities have increased. So any company that raised maybe 13 or 20 million and above definitely had some form of debt facility tied into that. It might not be a big percentage, but definitely, for example, the 400 million raised by MNT Halan, a major part of that was equity, but there was also a big portion of it that was debt as well. And even the 13 million raised by Jetstream, a portion of that was also debt, right? So I think definitely debt has increased, maybe just as I think it's been put in primarily to keep the fintechs on their feet, because when it's equity, it's almost like free money, right? But then when it's debt, then that you have to pay the money back. You're on a timeline, so you have to sit up and make sure you do things right. So if we're giving you $20 million or $400 million, yeah, a good portion of it is definitely going to be debt. And I think it's just to make sure they don't relax and lose focus, but they're steered the right way. So for the most part, the most of the money is equity, as far as I can see, because that's what I focus on. But I did see an increase in debt.
Okay. Which other types was big this year? Maybe DFIs, something from that end.
I would say yes. A lot of foreign investors, primarily, there were three that I took note of. IFC is one of them. MasterCard Foundation is one of them. Proparco from France is one of them. Those three actually popped up a lot during the course of the year, either funding fund of funds or even as direct investors in startups. Yes, definitely there was a lot of activity from multinationals. Absolutely. And that also goes to show that a lot of people are looking at Africa. I even think last month MasterCard Foundation funded about 27 million in three fund of funds. One of them, I think two of them are Nigerian, but I remember Vested Wall in Nigeria is one of the companies that received funding from MasterCard Foundation. So yeah, absolutely. And I did mention MasterCard Foundation and CC Help
earlier
as well. Earlier, yeah. So I think MasterCard Foundation definitely. Multinationals are doing a lot of stuff in Africa. Proparco, IFC, yeah, absolutely.
Okay, beautiful. Is there anything we seem to be missing out from this conversation on the things that shaped funding and investment conversations in 2023 on the continent? Anything we seem to be missing out?
I don't think so. But I would mention, there's something coming up that we could take note of, and that's this issue with the BRICS countries. That's Brazil, Russia, India, China, South Africa.
Yes.
Yeah, they're really pushing for their currencies to be included for international trade. Basically, they're trying to reject the dollar. Most countries have their foreign reserves in US dollars, and they're trying to challenge that norm. Like, why can't it be British pounds or euro or Japanese yen or Swiss franc? Why does it have to be dollars? So a lot of them are moving towards doing bilateral trade using their own currencies, and they're trying to wrap in Argentina, Egypt, Saudi Arabia, and the UAE. And I mean, if they get the UAE and Saudi Arabia involved, that's going to be a big problem that's actually going to be a big problem for the US dollar. So that is something we should take note of if they gain a lot of momentum from next year, because I think Argentina, Egypt, Saudi Arabia, Iran, a couple of countries were invited and they've accepted to join from January next year. So that is definitely something we need to look into. Is the US dollar still going to be as valuable in 2024? That's yet to be seen.
So this automatically brings up a lot of conversation around what we're basing. In fact, it's just the currency we're using as the basics for almost everything in business and funding, investment, and all of that.
Exactly. And I mean, I think that also ties into why Nigeria is trying to get ahead of the curve, bringing up how startups can exit through IPOs in Nigeria as opposed
listing
to
them also on the stock
exactly.
Yeah.
Rather than getting acquired by a company in US dollars. So I think all that is going to make for a very interesting 2024. And finally, I'll say as a final note, there's been an uptick in how we trade. Social commerce has been big this year. Social commerce being people doing trade over social media. So using WhatsApp, using Instagram, using Facebook, that has increased dramatically this year. And that's, again, there's more mobile penetration and more people are seeing the value of WhatsApp business or WhatsApp in general for trading and for doing business. There are even a few startups that are going into that sector where you install an app and that app can help you trade right in WhatsApp. So you don't have to close the app and open a banking platform. You can just transfer the money through the app through WhatsApp. So there are two companies that are doing that, one out of Ghana, one out of India, that are doing that. And I guess agency banking as well was big this year. Less and less people are going to banks. More and more people are doing agency banking. MoneyPoint is making a load of money. OP is making a load of money. I mean, when I go out now with Bolt or Uber, I want to transfer. Everybody has an OP account,
Mm-hmm.
So I think definitely that those two things, agency banking, that's getting big in Africa, and social commerce.
This year we really didn't see much of e-commerce and retail in terms of funding and money. I think the agri-tech and the health tech kind of like pushed them off.
Yes, you're right. You're right, actually, because what you said is not a lot of. They weren't pushed out in total, but there weren't a lot of them. I would say in funding this year, maybe e-commerce came fifth or sixth.
Oh,
so
wow.
they're not way off, but not too many people investing in them, because really there's no. What else can you do in e-commerce that hasn't been done, right? We have Jumia, who is a
Still
unicorn,
struggling.
but a struggling unicorn.
Yeah.
Yeah. So when you look at that, it's just like, do we really want to go into this space? But there was a startup in South Africa that's getting a lot of promise, and their e-commerce is focused on people being able to exchange. So you can buy something, and then if you want to exchange it for something else, or you want to upgrade, you can just sell it back and then add some
Wow.
credits and buy more.
Oh,
Yeah, it's
wow.
an interesting business model. So they got a lot of funding. I think they closed their pre-seed. I think they raised their seed round, and they did very well. So I found it very interesting, actually. It's in South Africa. I don't remember the name right now, but I do remember that was a different approach to e-commerce, and a lot of companies saw that unique feature, and they got a lot of investments. So let's see what happens.
Okay, so let's look at end of the year, Yuletide, Christmas, beginning of the year. What are your wishes for Christmas and for the new year?
Well, for me, in terms of venture capital, I hope we close on a high note. Like for the first half of the year we did very well, over 1.8 billion, and then Q3 we did 149, 120 million thereabout, and then in October it just dropped to about 50 million in all of Africa. So that's a huge decline from the progression we had all through the year. So I'm still looking at what's happened in November and tracking what's happening this month. It looks promising. So I just hope we close on a finish note. I don't want the overall difference for between 2023 and 2022 to be so substantial that there's even more scrutiny going into 2024, especially what we're seeing for the US dollar moving forward. So I guess my wish is, we finish 2023 on a high note.
Okay. And this ties to like your wish for 2024 too, or the new year?
I suppose, yeah.
Beautiful, that's fine. Thank you very much for joining on this episode of the podcast.
Thanks for having me.
Yes, thank you very much. So I've been speaking to Sylvester Kay-Adade. He leads market research for Ingressive Capital. And if you don't know Ingressive Capital and you're like in the tech space, I think you should just reevaluate what exactly you know in the tech space. Yes, thank you very much, Sylvester. Market research lead, Ingressive Capital. Ingressive Capital, okay, let's help you out. First, $10 million Fund 1 and $50 million Fund 2. They're a VC firm on the continent of Africa. And yes, Sylvester is your guy, investment trends, patterns across the continent, not just for Ingressive Capital, but the areas that Ingressive Capital covers on the continent and other areas too on the continent. Thank you very much for sharing these thoughts with us as we wrap up the year 2023. This is our funding and investment wrapped for 2023. Courtesy Sylvester from Ingressive Capital.
Thanks for listening, and don't forget to catch up on all the live shows right here on africatechradio.com.